regarding my story, I could have gone to a local college, and it's a good college, Fort Hays State University, and I could have gone for probably somewhere around $4,000 because I lived in the city over 4 years.
Hmm.
But I wanted to go to the expensive Christian university, and my parents
Mm-hmm.
let me, and I still had to pay for it, and that was my choice. And my parents paid for it drastically as well, and they did a great job. But you're right. There's this promise of this idea that, the world is going to want you.
Mm-hmm.
Your
That's right.
job, you're going to be so more valuable. I got out of college, got married the very following week, and was unemployed for 9 months. My wife and I did not get along, and she thought she was probably married to a bum. You know, I, I
I think
couldn't
you've
get
made
a
up for
job.
it now.
Yeah, no, probably a little
I'd
bit.
say you've made up for it now.
We're in 10 years, so we're doing pretty good now.
That is pretty good.
But yeah, I am literally a month away from paying off my student loans or less. And you're absolutely right. It has crippled my family. I wouldn't say crippled, but it's hindered my family for at least now 10 years.
I have bad news for you.
What's that?
The damage that it's done financially to you, that you can see, is like the part of the iceberg you can see.
Oh, don't say that. But
Here's
that
what you
makes so much sense, though.
here's what you need to know. I just wrote an article. I'm a contributor for Forbes.com, and I just wrote an article a few hours ago, actually, that's going to go live in a few weeks, and it is about that student loan concept. And I used a very simple example. I used an example where someone comes out of school at 22 with $50,000 of student debt. And, we've seen people with $500,000 between a married couple, between undergrad and grad. $500,000 of student loans is $3,000 a month for 30 years with no house. Like that's
Right.
nuts. But anyway, take $50,000 just as an example. And let's say that it takes you 10 years to pay that off at $500 a month, which is about right. I mean, we're
Mhm.
using simple math. Now you're 32, you're debt free, and you're going to take that same $500 a month and put it away until you're 67, your normal retirement age. $500 a month from 32 to 67 grows to, call it 650 grand, assuming a 6% rate of return. And we could play with that all day, but just for basic numbers. If you didn't have the student loan, and instead of paying $500 a month for 10 years to the student loan, you started paying that same $500 a month to your account and got the same returns, and you did it from 22 to 67 instead of from 32 to 67, you more than double your money. In other words, the $50,000 loan didn't just cost 50 grand. In that case, it cost almost $700,000 of wealth.
Uh,
So I'm sorry if I've ruined your morning, but at the end of the day, the young people are making these massive decisions. So think about that. Think about what $700,000 would mean now. And I know there's time value of money, and there's inflation, and the dollar's worth less in X number of years and all of that. But if you were to take a 4% withdrawal from that for life, that's $28,000 a year during your retirement that just disappeared because of one $50,000 loan.
hmm. So many people are in my same scenario.
Mm-hmm.
I can't change that now. So now what?
Well, what it means is you either have to save longer and work longer, which you don't necessarily want, or you have to put away more. You have a
Right.
fewer number of years, smaller number of years to save for your own financial independence. That means you have to put more away during that time. Enter yet again the side hustle. Because whatever industry we're in, most of the time, and in real estate, you can make whatever you want to make. You can choose how much to work and so forth, but there's also a limitation to all of us based on whatever line of work we're in and where we are geographically and everything else. It makes sense to have some secondary type of income for the household, whether it's two working spouses, whether it's a side hustle for one of both of you, and then putting that extra money away and living as if it didn't exist. So in other words, live on your own salary, put your side hustle away like it doesn't exist. And what you'll find over time is that your salary will become less and less and less important because you'll be building your nest egg
Right.
in a really profound way. If you use a side hustle for vacations or for cars or for consumer stuff, That's fine. I mean, we all have to live and we all want to enjoy ourselves. But if you use it for wealth building, it will create an enormous nest egg for you. And that's just one way to do it. I mean, you're 10 years behind.